Alrighty, guys. So the cat is officially out of the bag. We just got Sofi's earnings this morning a couple of hours ago, and let's just say their stock's been moving all over the place. You guys can see in the pre-market, we were at what, 680, shot all the way up to about 780, almost 790 at market open, and now we've lost all those gains, and the stock is down about 0.5% after being up at one point 11-12%. So we're going to break down the earnings in this video. We'll break down the charts, what I'm looking to do, all that good stuff. So if y'all find value, hit that like button. Make sure to subscribe here on YouTube. It's free. You might as well follow me on X as well at Stocks Talk Stocks. And if you guys want some free stocks, up to 16 stocks, each up to $2,000, use that Moomoo link down below. You can actually get a free share of Sofi stock and 5 other stocks guaranteed with just a $100 deposit. We'll talk more about that later. Again, link down below, or just go to stocksurfest.com/Moomoo. And with that being said, cheers. Let's dive right into the video. So before we dive into the actual earnings release, which we'll do that pretty soon here in about a minute or two, let me read to you guys the headline numbers here, which last I checked, hopefully my memory serves me right here, SoFi ended up beating on EPS and on revenue. Looks like here adjusted EPS they beat. It looks like that came in at -3 cents versus the loss of 7 cents expected. So that beat, which is good. And sales beat $530 million roughly versus $512 million expected. And they also raised their guidance from, let's see, originally full year 23 net revenue guidance was 1.97 to 2.03 billion for the year, right? Full year 23. And now it's at what? 2.04 to 2.06 billion, and the estimate was 2.02 billion from the analysts, right? So guidance for revenue raised. That's awesome. They beat EPS, great on an adjusted basis, and they beat on revenue on the previous quarter, which is always a good sign. So with that being said, guys, the headline numbers out of the way, let me show you quickly how the stock chart is looking. Here on the intraday, again, we were up around 11-12%. Once we hit about $8, almost $8, and now we've given back all those gains as the stock's at about 680. So now from the high, we're down 13.5% from 788 to where we are now, $6.83. And you can see with with the down move here, we took out the lows from Friday. Friday we hit about 685. That held all day pretty much, and we just hit 673. That's the low of the day that we hit about 20 minutes ago, whenever that was, right, guys? So the intraday, not looking so pretty. Same with the 5-day, 5-minute. To be honest, as of now, looks like the downtrend is continuing, and talk about a fake out, guys, at least as of now. It's looking like a fake out. The fact that we ran a 780 and that barely held, and now we're at 680, right, guys? And on the 20-day chart, you can see we popped over that 50 SMA. That was awesome. We ran all the way past even the 180 SMA for a minute there. But now, as a couple hours have gone by, we clearly failed to hold above that 180 SMA. And now, to me, guys, what do you think? Let me know in the comments. But it looks like we're putting in a lower high right here, and we're getting rejected at that moving average. Not the best sign overall for the bulls, and you guys can see on the 4-hour chart, the downtrend is continuing as well. Let me show you this. If I get the channel tool out, boom, draw this out a bit, pretty obvious that we're still in this channel. We ran to the top of the channel. We hit the 180 SMA on the 4-hour chart, and we got rejected. Now it looks like we're starting to dump back down, right? So at this point, man, lower mid sixes, like I said in my video yesterday, this could be a spot where we do get some buying more towards the bottom of the channel after we got earnings that I believe, at least the headline numbers, were pretty solid. Now let's dive into the nitty gritty a little bit. Let me come over here to Safari, guys, and we got some news about BlackRock. We're not going to talk too much about this in this video, but just to quickly look at this, SoFi and BlackRock partner on $375 million personal loan securitization. You guys can see if this wants to freaking focus on me. There we go. You guys can see here, if I come down a little bit, we can see, let's see here, a member-centric one-stop shop for digital financial services, yada, yada, yada. That's SoFi. They announced an agreement to place a $375 million personal loan securitization exclusively with funds and accounts managed by BlackRock. BLK is the ticker, New York Stock Exchange, according, This is managed by BlackRock Investment Advisors. Okay, I'm reading a little bit too fast here, guys. And it looks like here our access to different source of capital is a critical component to growing our lending capabilities and better serving our members, said Anthony Noto, who, of course, is the CEO of SoFi. BlackRock's great collaboration, seamless execution, and ability to invest across the entire capital structure made them an exceptional partner. And to date, SoFi has sold over $14.5 billion and securitized over $13.7 billion of personal loan collateral. So that's a big piece of news that we got today, which again, we're not going to go too deep into that because I want to focus mostly on what you guys are seeing right here. This is actually the earnings presentation, which gives us a great visual. So let me make my big old head a little bit smaller, way smaller actually, guys. There we go. So we can see the growth and these numbers from SoFi. Very important. So you guys can all access this, obviously. Just go to, investor relations and then type in SoFi and you'll see this entire presentation, which honestly, we might not be able to go through every little itty bitty detail, but we'll do as best as we can. So this right here shows you guys the members' growth over time, pretty much over the past couple of years. You guys can see this is in the thousands, right? So tack on 3 zeros to the end of all these numbers, right, guys? So you guys can see here, back in Q1 2020, we were looking at 1 million members pretty much, almost 1.1 million members, which is the first bar right here in, the bar chart right above my head. And you guys can see the growth over time and the percentage growth, which you can start to see from Q1 2021 on. And with the pop that we saw this quarter, Q3 from Q2 2023, that grew 47%. The members grew 47% to a record new member additions of 717,000. So at the bottom here, you guys can see the blue numbers. Those are the new members in thousands. And at the top, on top of the bar, we can see the total number in thousands. So 717,000 new members were added in Q3, bringing the total to almost 7 million members. And sure, it's slowed down. The growth has slowed down over time, but guys, they're still growing 50%. We're talking quarter over quarter here, not year over year. Quarter over quarter, new members are growing massively, right? Or actually, no, this is the year over year growth. Excuse me, guys. Ignore what I just said. It's not 47% quarter over quarter. It's year over year growth. But still, 584,000 members, new members last quarter, excuse me. I'm mixing up these terms here, guys, today. Bear with me, first video of the day. But 584,000 in Q2 2023, 717,000 Q3 2023. Nice growth there in members and products. You guys can see right here, this is in thousands as well. New products were growing pretty nicely, right? Year over year growth, 45%. From Q3 2023 or from Q3 2022 to Q3 2023. And now we've surpassed, 10 million new products, which is awesome here, guys. Record new additions of 1.05 million in Q3, bringing that total to 10.4 million, up 45% year over year. Very impressive there from the product side of things. And Galileo accounts have slowed down a little bit over the past year pretty much, but still grew a little bit, 10% year over year, 137 million Galileo accounts. All right, compared to, last quarter's 129. And let's see, Q3 of 2022, roughly at 124 million. So that grew a little bit, but of course the growth there has slowed down tremendously. And you guys can see coming down a little bit more, lending and financial services products. You guys can see the growth there in lending products, in thousands, up 24% year over year to 1.6 million. That's the chart on the left here. And on the right, we have financial services products up 50% year over year to 8.9 million. Unbelievable growth there, guys. And you can see here the financial services productivity loop, which this shows you we can pretty much see that's reached an inflection point, which creates marketing efficiencies and improves the overall numbers, right? You guys can see here we have total financial services products in blue and the total lending products in, I guess, dark blue or navy, whatever you want to call that. Both of those have been growing quite nicely over time, which is nice. And coming down here a little bit more, we have quarterly net revenue adjusted, which has grown nicely over time. And you can see adjusted EBITDA also has grown nicely. And for sure, revenue growth has slowed down, but still, guys, 27% rev growth year over year. 531 million is what they just did for revenue, and last year, same quarter, they did what, 419 million. So that's pretty good. 27% year over year growth there. Can't complain. And this part of the report pretty much breaks down the metrics a little bit more in depth. You guys can see everything in front of you, right? We have here the members growth, the products growth, lending products, financial services products, and coming down a little bit more, which is what I really like to look at here, which you guys should definitely go look at this on your own if you want to look at it in full depth, right? But this shows you at the top, especially, which is what I'm going to focus on right now. This shows you the student loan originations, personal loan originations, and home loans originations, and of course, total originations of those all added up. So based on the last quarter here, guys, let me see. We had a lot of personal loan originations. Student loan originations pretty much tripled up from the last quarter in Q2. And I know you guys can't read these numbers. They're so tiny. But let me actually zoom in. Maybe you can see it a bit if I zoom in. But either way, you guys can see right here, last quarter for student loan originations, right? $395 million. Now it's at $919 million as of the last quarter, right? So from Q2 to Q3 2023, that grew massively. And let's see, personal loan originations. Let's see here, guys. That grew from 3.7. I mean, that was already pretty high. In Q1, it was at $2.9 billion, $3.7 billion in Q2, and then in Q3 it grew a little bit more, $3.8 billion. And of course, under that we have the home loans originations, which those have grown pretty tremendously from Q1. In Q1, 89 million, and now 355 million as of Q3. Pretty interesting there, guys. So again, you can't see these numbers. The freaking screen's way too small, but take my word for it. Those loan originations are growing. And again, make sure you guys go check the stuff out on your own. And now we have a bunch of financials, which we're not going to get too deep into in this video, guys, because we're already about 12, 13 minutes in, and I don't want to make this video too long. But pretty much, guys, look, growth has been slowing down. All right, makes sense. The company is getting bigger. And now that we're seeing student loan origination starting to pop again, right? We have people paying on their loans again. I mean, we'll see how that affects the company. You know, this is going to be interesting times for SoFi. Will way more student loan volume come in? I feel like that's totally a possibility here. It's likely. Maybe that's priced into the stock already. I have no idea. But at this point, look, earnings were solid, guidance was strong, and the stock popped for a reason. You guys saw that. Initially, it was up 10%, and we've given back some of those gains, pretty much all the gains, which I'm not sure exactly why, and that's the thing about the stock market, guys. Nobody knows exactly why things are happening, but I think it's not really warranted, the fact that we've given back all those gains, and I feel like this could be due for a relief rally. What do you guys think? Let me know your thoughts in the comments. Hit that like button. Make sure to subscribe here on YouTube. It's free, and you might as well follow me on X at Stas Talk Stocks. And if you guys have not gotten up to 16 free stocks yet for Moomoo, what are you waiting for? Use that link down below, or just go to StasSurfS.com/Moomoo. Once you open up your account and fund it with your initial $100 deposit, you get 5 stocks right off the bat, and you get a free share of, you guessed it, SoFi stock on top of that, again, with just a $100 deposit. And if you fund your account at least $1,000 on top of those 6 stocks, you get 10 more stocks for a limited time, guys. So use that link down below, and I'll catch you guys later.